Industries Limited is now joining us. Thank you so much for taking your time out and joining us here on ET Now. And first up, let's talk about your volume growth. And you've guided for nearly 35% volume growth and 20% EBITDA growth for FY26. What gives you the confidence in sustaining this momentum through the rest of the fiscal? And do you expect the second half of the year to be much stronger as compared to the first half?
We were going in the first quarter of this financial year, our estimates were a little more conservative. I would say that we now that we are already 6 months behind, 6 months in the financial year, I think we have a clearer picture of where we see our demand. We were also anticipating some margin reduction to push volumes, but that has not actually happened. In fact, we have been able to demand a premium on a lot of products because Bansal Wire as a brand, we see that in a lot of product, it is not replaceable. Therefore, it gives us confidence even for the future to keep on getting the same kind of EBITDA. And of course, volume is there because we have availability.
Right, Mr. Bansal, how is the demand shaping up across your key end users like automotive, infrastructure and construction, and where are you seeing the strongest growth coming from?
So I think for us, because we are well diversified in automotive, infra, consumer durable, general engineering. So I see because of the manufacturing push also from the government, I feel that the demand is everywhere. And as a strategy for the last 5 years, 10 years, we've also worked wherein we do not expose ourselves too much to any one customer on one product. Therefore, in times like these, when we have reasonable demand from all sectors, I think it is easy for us to grow. But if I have to pinpoint one or two particular segment, I would say automotive is definitely the leading area for us, wherein we supply most of our products. Second is also the power and cable industry that is doing well, wherein we see a lot of demand coming from.
Understood. So that's as far as the domestic demand environment is concerned, which continues to remain very strong. But Mr. Bansal, let's also talk about exports. And if you have any plans to expand your export footprint, especially in specialty or stainless steel segment, if you can take us through your global expansion plans.
So export as a percentage of our revenue is generally about 10%. And I think our export would continue to be at that kind of a level. What that means is, as a company, if we keep on growing at 20-25%, export should also grow at 20-25%. That is the kind of estimates that we have for export, nothing more than that. For that, we already are exporting to about 60 plus countries today. And I believe that we have a good customer base wherein we can achieve this 20-25% growth.
Also, Mr. Bansal, speaking of the exports, then what is the export target for FY26 and FY27?
As I said, we want to keep growing at 20-25% in export as well. And most of the sale for our export business comes from the Europe and the US. So those will still remain the key markets. Even after a high tariff in the US, the demand for our product is still there and we are still able to achieve decent numbers. And this is what we want to continue.
All right. And what will your export target be then for FY26 and 27?
Sure. So we have already, in fact, received two sample approvals from major tire companies, and the second stage of approval process has started. We expect commercialization by mid of next year. After that, there will be a steep ramp up in the product because we only have a capacity of 20,000 tons in a market of 2 lakh tons, 2.5 lakh tons. But of course, as and when we get our approvals, we will also try to expand our capacities as per the requirement. In terms of margin, I think in general, specialty wire being part of steel cord being part of specialty wire enjoys a 20-25% kind of EBITDA in general as specialty wire unit.
All right, Mr. Bansal, thank you so much for taking the time out and weighing in on the numbers. We'll let you go on that note.